Last week we had our third Green Finance Summit. How many people were there? A couple, a few. That's terrific. We actually had 1,200 people registered, 300 people in standing room, waiting only, and the walls were lined at the back with people who couldn't get a seat. So we felt it was a very exciting event. And what it meant to me in particular, that was, even, I don't want to sound too dramatic, but what we felt was that finally the writing on the wall for the financial community is very clear. The environmental crisis that has been creeping up on us all for decades has suddenly been recognized for what it is. And crucially for all financiers, the impacts of climate change are no longer theoretical. They're not out there 30, 40 years away, they're happening now. It's affecting share prices, they're impacting the value of assets, they're affecting capital allocated, they're affecting the interest rate margins that banks are charging, and so on, and they will continue to do so. So banks, investors, pension funds are all waking up and doing something about it. And this, for a banker, is extremely exciting. Those of us who have this sense of urgency about the whole climate discussion finally feel something is happening out there, something is really waking up. It's as though the seriousness with which we're treating climate risk is evident throughout the financial community. We've crossed some kind of credibility line where people say before, it's good to do, not really very interesting, to we have to do it, and by the way, there's some real risk to be mitigated and some really interesting commercial profits that could be made by investing in the right institutions going forward. And I think that the good news is the way that the public and private sector have been responding in the last few years. And for the first time since the Industrial Revolution, the UK is now producing more power from renewable energy sources than fossils. We've taken some significant steps, being the first major economy to commit to a legally binding net zero target by 2050, building on the Paris Agreement, and so on. And I will remember Theresa May for that, if nothing else, and I wish she'd discovered her green side earlier than she did. And I think the impact of policy changes can't be underestimated, what gives weight and direction to a lot of what we're trying to achieve in the city. Green finance is no longer considered just a nice to have or something for environmentalists. It's something that every financier has to start thinking of. It's prudent, it's profitable, and it's on the tip of everybody's tongue. The bad news is we're running out of time. There's a real sense of urgency for those of us who are in the industry trying to make things happen. And the efforts we're making here are as nothing compared to the negative challenges of the world's major carbon producers, notably India, China, and Brazil, and so on. And secondly, sometimes things seem to happen painfully slowly. If we take a 50 to 100-year view on where we are, yes, things are happening quite quickly. On a day-to-day basis, as we were just agreeing, we'd like to see things happen much faster. They seem so blindingly obvious to make pension funds agree that they will consider climate risk in their portfolios. It takes time to get that through the legislation to make it happen. What I think we can all agree on is that the financial sector has to be a key part of any viable transition to a more sustainable future. And I do think London is very well positioned to help in this, although the problems in the UK are as a minor drop, a minor particle in the atmosphere by comparison with problems elsewhere. The title of this discussion was also brought Brexit in, and I think this is actually we call it a through Brexit policy, which means that we can carry on talking about this for much longer than Brexit. And I think in answer to the discussion about coordinating with Brussels, we coordinate with Brussels and Paris and Frankfurt and Stockholm as much as we possibly can, because these are global issues to get right, even if the solutions will be very local. The mortgage rules in the UK are different from the mortgage rules in France and Germany and Sweden and China, even though the concerns are very much the same. We set up the Green Finance Initiative 3 years ago in the wake of the Paris Accord to bring public and private together, and that small coalition of the willing has been working across government and across all aspects of finance to try and take what is ultimately a very simple idea, that finance should be priced into environmental risk, that we should take that into account. And through the Green Finance Task Force, which came last year, we gave government 30 recommendations across 10 different themes. This led directly to the Green Finance Strategy that was launched last week and the formation of the new Green Finance Institute. We get so bogged down with abbreviations and titles that we sometimes don't know what we're doing. But the new institute that's just been launched and headed by an ex-capital markets banker from Barclays Bank, Rhian Marie Thomas, is going to sit in that space between public and private, where private institutions find barriers and blockages to what they're doing and present those as something that government can help to solve. On each one of your round tables, I see fascinating subjects for discussion to look at what those barriers are in every area, whether it's retail, whether it's venture capital, whether it's greening the system, whether it's nomenclature, that we can bring, and the Institute will be working on exactly that subject. And I think this is because the biggest barrier that we see to growth in green finance is how do you take one small, simple idea and build it into something much more extensive. And there are some really good examples of market transformation where this can happen. I'll come to those in a moment. But how do you take a good transition project, a single financial instrument, how do you repeat it and make it grow? The green bond market has been going for 10 years now. It's finally reached about $1 trillion outstanding, if you take into account the domestic and the municipal markets as well. It's something like $250 billion will be issued in the international markets this year. And that's after 10 years of making this happen. Absolute all credit to Sean Kidney and the Climate Bond Initiative for making a lot of that happen. But things take time to get going and you just want it to happen quicker. So how do you take something and build it into something larger, I think is one of the main blockages that I feel. And that's why we want a catalyst to make it happen. And that's why we formed the Green Finance Institute, bringing together public and private sectors to accelerate this mobilization of capital into what we think are better carbon-reducing projects. I have to say, I think this kind of conversation, this grouping, this amount of attention paid to this subject would have been unthinkable just 5 years ago. So it's really encouraging to see it happen, even if we have that sense of wanting it to happen quicker. It's an extreme challenge. It's the largest social and economic transformation the world has ever seen if we go where we want to go. And I think finance has got an amazing ability to play a central role in that because we're talking about risk and we're talking about opportunity, about new investment opportunity. And if we get those right, we will find the right incentives to make the new investment happen and happen very well. What's actually happening in the city with my remaining minutes? Well, a lot of this is being driven by the major institutional investors. I'm sure there are some here today. And they're asking two questions. They're asking, what is the effect of climate on my investments? My investment in Jaguar Land Rover, which I love to use as an example, just written off $3.6 billion as a result of a government decision about diesel engines. It costs us more money to lend to Jaguar Land Rover today. The investor has lost money on their shares. They never thought of that as a climate risk before, even as a political transition risk. So what's the effect of climate on my investments? And what are my investments doing to the climate? How much do I have in brown assets? How much do I have in oil and gas? How much do I have in all the areas you can think of as not, or mining, not always being very good for the climate? And that's not to say we shouldn't invest in BP and Shell and the others. They're terribly important to our pension portfolios, and they may be the solution in the transition because they're the major companies to make it happen. So it's not making a judgment about that. It's just saying that is one of the questions that investors are asking. And there has been a very good market response. The creation of green equities, the creation of green equity funds, the measurement of the carbon data inside individual stocks so that we can create portfolios which would then, for instance, be eligible to be part of a green ISA, would be one example of that, which we're working on. There are trillions wanted for the green transition. There are billions being created. Every investment banker in the world ought to be delighted at the proposition of having to fill a trillions need with only billions outstanding at the moment. The rating agencies are into the game. Standard & Poor's in the last 3 years has re-rated some, I think almost 1,000 companies, of which some 40% have been downgraded as a result of their climate profile and their ESG ratings. They've also upgraded some and they've been neutral on others, but Standard & Poor's are clearly very much in the game. So the regulators, the Bank of England has been actually Mark Carney's been a fantastic leader getting people to measure, to disclose what their climate risks are, getting banks to think about it, getting insurance companies to be more accurate, getting companies to have a TCFD framework which they can then report to and which gives investors better opportunity to understand what they're doing. The Bank of France has led this network for greening the financial system. Again, a great combination of different central banks looking at the problem. And the reason I feel very cheerful, very optimistic, apart from, as was pointed out earlier, a sense of self-preservation about the whole thing. The reason I feel optimistic is because there are some wonderful examples of market transformation out there. One, I work for a Swedish bank, one is the Swedish krona domestic bond market. In the first quarter of this year, 1/3 of all Swedish krona domestic bonds issued were green. And that is a remarkable statistic for any domestic bond market. In the UK, our gilts market is about 0.1. In America, there's a number of municipal bonds, and it's coming up to being, I think it's around a 0.5% in America, so it's quite active. In Canada, it's 2-3%. In Australia, it's 4%. In Sweden, it's 33%. So you begin to see how markets can be transformed into behaving differently. I would love to see everybody in this room, their pension fund, to at least be 50%, maybe more, 50% invested in green assets. Today, none of you have a single green asset in your pension funds because we don't have the data, the measurement system, the funds to invest in. We're very good about plastics, we're getting better. We're getting better about our cars, we're getting better about insulation in our roofs. We don't yet focus on our pension funds enough to ask the questions, what are you doing, where are you investing my money? It'll come. The other example of market transformation is in the States, where Fannie Mae is a large federal mortgage supplier. They have a system for multi-family apartment blocks, the kind of blocks that Friends was filmed in, and they lend mortgages against cleaner, greener, better water-efficient houses. They launched a scheme some 5 years ago which took 1/8% of the cost of the mortgage for these multi-family apartment block mortgage holders. They did a few deals, not very much happened, a few $100 million. They increased that to 1/4% in 2016, and they paid for the cost of the water audit, and that went from a few $100 million to $50 billion in the last 2 years. Market transformation for multi-family apartment block mortgages in America. Just amazing, really, really exciting. So the fact that we can transform markets gives me, as a financier, the hope, the optimism that we can make it work elsewhere as well. In the Green Finance Institute, just to mention that, we are focusing on a number of different initiatives straight off. The first one is buildings, energy efficiency, building standards, and how we can create a bigger, better green mortgage market. The Barclays Bank has launched a small one here. Two of the other building societies have a small green mortgage bond market. It's not yet come to any great size. Sometimes it's very hard with our building stock in this country to retrofit them in the right way. That's something we're working on very closely. We're working with the Environment Agency and Gifford and others on the resilience agenda. Resilience is a very important part of the green finance agenda. How do we make our systems, whether it's waterways, our energy, properly resilient against possible climate disaster? And we're looking at supply chains, the sustainability and the sourcing of supply chains and where products come from, how we can be more accurate in that. We've also got on the cards to look at shipping and how we can provide the financial incentives to make the shipping a better, cleaner industry. We're looking at electrification, particularly for battery storage, as well as cars and transportation. And we're looking, of course, at pensions and the rules that govern fiduciary agents and pension fund trustees and what they must ask when they're investing those pensions. That they should ask the right questions and that they should also have regard to climate change as a risk in those portfolios. Today they're meant to have it, they don't always apply it strictly because there hasn't been a kind of tradition to do so, and that is coming into law later this year that they will have to do so. We're looking at land and regeneration, and we're looking at climate analytics as a number of areas that this institute is starting out with. So I think there's a lot happening in the green finance space. I think we're winning the battle on finance. That's a very big claim to make, but I don't think the issue is climate finance. I think the issue is finding the right product to fill the investor's boots. And I think, therefore, all these nitty-gritty little things about how to change the law to unlock the barriers for growth in products is what we really want to do. We need government to help with that, to find the right ways to do it and go forwards. So, as I say, governments can do a lot to promote this, so let's keep the pressure on them and keep doing the right thing. As Mary Robinson said last week at the summit, get angry and get active and bring in that sense of urgency into everything we're doing. As I said, your roundtables look really interesting and really relevant. I would love to know what the system blocks are that each of you identify at the roundtables. Gather those, send them in, or send them to the organisers of the crowd, and we will try and work with those.